Hello everyone, I'm Derek Anderson with your weekly crypto roundup. This week, we're going to lament how Bitcoin has failed to post consecutive gains for another week, explain how one trader's bad decision has affected a lot of good traders' good decisions, and talk about a couple of coins that have been bucking the trend. Those are headlines. Let's get to it. So top of our headlines for this week, the battle for Bitcoin respect rages on. The price of Bitcoin managed to sink a disheartening 14% in the first week of August, giving back most of the gains that it had managed to accumulate during the second half of last month. Nevertheless, Bitcoin is still up 7% over the past 30 days, keeping hopes alive for the bullish hodlers who are looking at the losses over the first half of 2018 and hoping for that moonward trend. What still remains in play for the bull case scenario for Bitcoin are hopes that a decision by the SEC will finally be approved for a Bitcoin ETF. This would not only open up Bitcoin to institutional-based investments such as Wall Street money, but would also give Bitcoin an air of legitimacy that is still sorely lacking. Next up in our headlines, the OKEX margin trade blunder proves costly. So if you haven't heard about this one, here's some details. A 10% drop that happened over the course of 12 hours early last week was enough to completely wipe out a $400 million plus contract placed just a few days earlier, forcing mega exchange OKEX to invoke their, quote, societal loss management mechanism, which allows them to liquidate profits from other traders in order to pay for losses not covered by their insurance. OKEX is a China-based exchange, and it's the second biggest in the world, averaging close to $900 million in trades a day. All exchange users are bound to honor the clause as a part of OKEX terms of agreement, which effectively subjects profitable traders to the mistakes of unprofitable ones. In a statement released Friday, OKEX detailed further explanation of exactly what had happened. Quote, the client with user ID 2051247 initiated an unusually large long position order, 4,168,515 contracts, at 2 a.m. on July 31st, and triggered our risk management alert system. Our risk management team immediately contacted the client, requesting the client several times to partially close the positions to reduce the overall market risks. However, the client refused to cooperate, which led to our decision of freezing the client's account to prevent further positions increasing. Shortly after this preemptive action, unfortunately, the Bitcoin price tumbled, causing the liquidation of the account. End quote. Though OKEX's move is legally justified, it has created a large amount of investor uncertainty within the Bitcoin community and has attracted outright ridicule from several experts in the crypto exchange industry. Next up in our headlines, company backed is to help Bitcoin's quest for legitimacy. Although it's not yet the SEC Bitcoin ETF approval that everybody is so anxiously waiting upon, Bitcoin did get a ringing endorsement from the owners of the New York Stock Exchange last week, in the form of their announcements of plans to open a federally regulated Bitcoin market. Their new company, called Bakkt, plans to open the accessibility of Bitcoin to inclusion in mutual funds, pensions, 401ks, and other retirement plans. This would also help pave the way for a widespread adoption of crypto-based debit cards and crypto-based retail payment across the entire United States, with the final outcome being eventual replacement of credit cards with Bitcoin. The thought process behind the creation of Bakkt is that by bringing a Bitcoin market that has high standards for regulation, perhaps the general investor will feel safer about using it and even making investments in it. As OKEX proved just days earlier, a lack of strict regulation leaves the doors of uncertainty open when it comes to Bitcoin, potentially causing damage even to those who always play by the rules. Intercontinental Exchange, the owners of the New York Stock Exchange and other global exchanges, have partnered with Microsoft, Starbucks, and Boston Consulting Group, creating a joint venture among some of the world's biggest retail titans. Next up in our headlines, we have our coins bucking the trend segment. Last week was a doozy for most coins, with only 5 of the top 100 by market cap not finishing in the red. Inherently tied to the value of Bitcoin, many coins suffered double-digit losses, some sinking as much as 20 or 30%. However, there were a couple of coins that managed to do tremendously amidst the bloodbath, gaining in value not only relative to Bitcoin, but also to the dollar as well. Using our proprietary goodness index, the formula to which we outlined in last week's segment, we identified 2 certifiable winners that were up in price on heavy trading volume when compared to Bitcoin. It should be noted that of the top 50 coins by market cap, the average goodness index score was 1.81 last week, with a standard deviation of 26.3. For the first of our coins bucking the trend this week, we have H-Share, HSR on the exchanges with a goodness index of 160. H-Share is a next-gen cryptocurrency that aims to serve as the bridge between block-based blockchains like Bitcoin and Ethereum, and just about every other blockchain, and blockless blockchains, such as those used by Byteball and IOTA. It uses a hybrid proof-of-work and proof-of-service hashing algorithm that was created to act as a DAO, or Decentralized Autonomous Organization. This means that it contains the means for self-governance and can process transactions from coins on other blockchains without the need for human oversight. So why is HSR up 10% in the last 2 days, taking off in a week when Bitcoin has been hitting the skids? Well, there's a good reason. The project is currently undergoing a transition from its beta chain, just a simple proof-of-work blockchain, not much different from Bitcoin, onto its own main chain, which is the fruit of its developers' labor. Pre-existing HSR coins will be swapped for the new coin on the main chain called Hypercash. This is a serious network upgrade, and it has attracted quite a bit of attention from the cryptocurrency community at large, and has been a reason for celebration among longtime HSR holders. In addition to implementing a fully functional DAO, the new coin will offer some pretty bold features for cryptocurrency, including quantum resistance, a built-in exchange and parallel blockchaining that will not only allow for lightning-fast transactions, but a degree of scalability as well. Next up in our coins bucking the trend, we have Ethereum Classic, ETC, on the markets with a goodness index of a respectable 69.7. In case you were previously unaware, Ethereum Classic is the original Ethereum blockchain that did not roll back the chain to cancel out transactions from one of the biggest crypto hacks that has ever occurred. Due to an exploited coding blunder, hackers made off with several $1 million worth of Ethereum that was raised during the ICO for an early Ethereum token. Though the project represented by the token is no longer in operation, it did set the stage for an intense philosophical debate of whether or not a coin's blockchain should be altered in the event of a major hacking event. The Yes camp, backed by developer Vitalik Buterin, won out in the end. And the popular version of Ethereum as we know it today, ETH, contains the rolled back blockchain, in effect nullifying any transactions related to the hack. The No camp, insistent on keeping Ethereum with transactions concerning the hack in place, refused to accept Vitalik's new Ethereum, and is now referred to as Ethereum Classic. What caused ETC to post plus 16% gains against Bitcoin on heavy volume in a week when all but 4 other coins in the top 100 were down? As pointed out yesterday by our residential technical analyst Jonathan Morgan, Ethereum Classic was recently announced as headed to exchange giant Coinbase to be listed among 4 top other coins. Ethereum Classic still enjoys all of the perks of Ethereum, but trades for just a fraction of the price, considerably distanced from the limelight of Ethereum's glory. However, because of Coinbase's announcement that they were wrapping up final testing for the ETC wallet hosting, it will now be accessible on some of the world's biggest and most trusted cryptocurrency exchanges. This will no doubt open up a huge market of potential for the coin, perhaps restoring some of its credibility. It should be noted that most of the Ethereum illicitly obtained during the hacking incident was immediately frozen by the exchanges to which the hackers sent it, meaning that very little of the Ethereum Classic that was hacked was ever brought to the market. This implies that, sans the endorsement of master developer Vitalik Buterin, Ethereum Classic is every bit as good a coin as Ethereum. It just lacks the level of media and community attention that Ethereum does. So in case you missed it, we here at Coinclarity have recently wrapped up a 3-part series on the legend of Bitcoin's creator, Satoshi Nakamoto, in an attempt to provide a thorough summary of all that is currently known about him, her, or they. In the first article, we compile all of the links, well, most of the links that are attributed to Satoshi Nakamoto, such as the Bitcoin white paper, Satoshi's original posts on the P2P Foundation forum, and his posts on his self-created Bitcoin Talk forum. We also present some of the email correspondence that was made public between himself and other parties. In the second article, we present a list of personalities previously suspected of being Satoshi Nakamoto, him, her, or themselves, and explain why most of them are likely to be him, her, they. In the third article, we present some novel theories about Satoshi's identity, taking into consideration that he might very well not be one person, but a collective of individuals, or have been put together by the US government, or a well-funded consortium of motivated parties. One thing that is for sure is that the identity of Satoshi Nakamoto remains one of the internet's biggest mysteries, and that he is currently sitting on a fortune of close to $7 billion, or perhaps a lot less if he's lost his private wallet key. If this latter part did prove to be true, it would render Satoshi Nakamoto one of the biggest bummers of all time. And that's it for our headlines for this week. If you enjoyed this video and would like to see more, pop over to Coinclarity.com and sign up for our weekly newsletter, which includes a copy of this video. Like and comment below if you like this video and want to comment. And of course, hit that subscribe button for the latest news, reviews, and updates on the world of crypto. This is Derek Anderson signing off for this week. Stay classy, people.